Okay, I want to thank everyone for joining us today, where we're going to be providing an overview of the high-level accounting concepts specifically for nonprofits. I want to give you guys a quick introduction of who will be presenting today, who we are, and why we're on this call together. So I'm the shareholder, Scott Kroger. I'm the tech shareholder. We have a 70-person division within Lutz that provides technology services for all kinds of businesses, but in particular, we provide a lot of technology support for nonprofits, which is why we have a relationship with TechSoup, being a technology provider, and that's how we got to form a relationship with TechSoup, which is kind of how this whole thing came about when we said, hey, maybe we can also help with some of our other professional services, educate the nonprofits that you support on accounting for nonprofits. So that's who I am. We have Steve Nebbia, who leads our outsourced accounting practice. He has been a consulting director for 12 years, and he has deep experience helping nonprofits strengthen their financial operations. And then we also have Will Fry. Will has been in the audit practice for about 7 years, specializing in financial statement audit and assurance services, and he has a specialty in helping startup companies and business founders. So looking forward to have them present here in a minute. Here's who we are. So Lutz is a 300+ person professional services firm. We're primarily located in Nebraska, headquartered in Omaha, Nebraska, kind of right. You put your finger in the middle of the country, you pretty much will hit Nebraska there. But we've been around for about 44 years, founded in 1980. 3 offices again: Omaha, Lincoln, and Grand Island, some of the bigger cities in Nebraska. A little over 370 employees. I think the thing that is most relevant for this group is we do have a large nonprofit practice. We serve over 270 local and regional nonprofits, and we're very fortunate enough to be able to do that. Technology driven. So a lot of what we do is very, very tech forward. We understand that most businesses, whether they like it or not, are becoming technology businesses, and we try to help stay on the forefront of that and help our clients do that. And then we do have, like I said, we kind of view ourselves as a department store of business services, where it's technology, accounting, consulting, mergers and acquisitions, HR, anything that a business would need that's not core to their business. We like to position ourselves in that consulting role and provide professional services where appropriate. I do want to add, just back on that slide, Merrick, I think one of the things, these are our core values over here. We're very proud of those core values, and every employee that comes in, we try to live and abide by them. The thing that I wanted to point out is the making the complex simple. I think that's one thing we're going to really try to avoid big buzzwords. We really like to take complex concepts and try to simplify them and use analogies and use sort of our Midwestern folksy approach to explaining things simply, and that's what we try to live by. So thank you, Merrick. Okay. Here's what we're going to talk about today. So just sort of nonprofit accounting 101. So this is not a 201 course. This is not a 301 course. We're going to try to keep this as simple as possible. And we are going to talk about sort of the major components of it. So basics of financial reports and assurance work, sort of that audit and attest work. And that's where Will's going to come in, and he's going to be able to talk about those aspects of a nonprofit practice. Tax compliance, that is definitely something that is on everybody's mind, but in particular, some of the 990 and some of the nonprofit specific nuances that are relevant to everybody on this call. Definitely going to hit on that. And then we're going to talk about some other accounting considerations that are relevant, kind of donor management and those things that are relevant to nonprofit practices. We'll get into that as well. And then we'll just talk in general about outsourcing the entire function of accounting as well. We'll kind of end with that. And definitely, again, put questions in the chat there. We're looking forward to answering as many as we possibly can. And with that, I'm going to turn it over to Will, who is going to start with kind of the financial reporting and assurance portion. Take it away, Will.
Yeah, thank you, Scott. Yeah, like Scott said, I'm a manager here in our audit and assurance practice at Lutz. I also serve on a nonprofit board for an organization called Teammates here in Nebraska. And then Also, like Scott said, I work with startups is a little bit of my specialty. So, I've been used to working with people who are founders of a startup and doing the accounting all by themselves, and then also all the way up to, large complex organizations with 20-person accounting teams. So I say that to point out that yes, some of this stuff might look and sound intimidating as I get into the term audit, but there's always partners that can work with you at every level. So financial statements. Steve's going to talk about internal reporting, but as I'm going through this is just to set the stage. This content that I'll talk about is geared towards the external reporting of financial statements. So what are financial statements? They're a summary of the accounting data that you've been tracking as you go. So when a lot of people in the chat mentioned you're managing QuickBooks, you're doing the accounting for your organizations. Your financial statements are in QuickBooks, they'll report them for you, but they take all those detailed transactions and detailed accounts and put them into summaries that present them. So the three statement financials are your statement of financial position. I like to call this what we have, and for nonprofit organizations, it's what we have and how we can use it. You have your statement of activities, which is where did it come from and where did it go? And then your statement of cash flows, which tells you where you spent your money and how it came in. Did you get all your money from donations? Did you get any financing from a bank loan or anything like that? Go ahead, Mary. So third-party assurance. Like I said, the financial statements I'm talking about are in an external context. So these are reports that some third party or some external stakeholder is going to ask you for, and they may ask you to get some level of third party assurance, like an audit or a review. So what does that mean? Third party assurance is when an independent CPA firm comes in. They're going to look at your books at various levels depending on the level of assurance you're getting. And oftentimes they're able to help you put together your financial statements and do it in a way that's compliant with the accounting standards. And then it's also important to note that most of the time, these financial statements need to include footnotes, which, I talked about the three financial statements. The footnotes dig into the details of, yes, you might have a loan on your books, but footnote will explain when you got the loan, what the interest rate is, some more of the details. So your third-party assurance partner can help you assemble those things in a way that's compliant with accounting regulations. And when you give it to whatever stakeholder's asking for it, they know that they can look at these financials and they're going to be comparable with other organizations that have given them audited or reviewed financials. The true product of any third-party assurance work is the accountant's opinion letter. So if any of you have gone through an audit or a review, you might be familiar with this. You have your financial statements, and right at the front of that, there's a letter from whoever did the work for you that says, hey, we looked at it, depending on the level again, at various levels, and we provide our stamp of approval to say that these are compliant with the accounting standards and that the information is clean and clear. Go ahead and hit the next slide. So, like I said, there's different levels to third-party assurance work. The first thing that you should ask anytime somebody comes to you and says, hey, I'm going to need audited financials, is to get an understanding for why. And I say that not to say you should be combative with these people and say that you don't need to get audited financials, but when you get a better understanding for why you need it, then when you go reach out to a CPA firm to provide that service to you, you can work through with them all these various levels. So I'm going to talk through audits and reviews, but also know that there's other levels of assurance, compilation, preparation that uh, provide limited assurance as well. Um, so who might ask for these things? Your board of directors, major donors may ask for them. If you're going to go get any sort of debt, sometimes a bank will require that you get it as part of the loan. But again, understand what their motivation is and use that information to work with your accounting partner and figure out the best solution. So an audit is a formal examination of the financial records and internal controls. I mentioned the accountant's opinion letter that'll come with any of these services. An audit issues the highest level of assurance. A review is the second highest level of insurance. It's important to note that third-party assurance is not going to look for fraud. So, you should think of this provider that you're working with as a partner who's truly going to help you understand what needs to be accounted for, how it needs to be accounted for, and how it needs to be presented and communicated on your financial statements. So in an audit, like I said, it's the highest level of assurance. Your auditing team is going to come in, look through your information, obtain the supporting schedules for any of your major accounts. So for your accounts receivable, they're going to want to see your listing of who makes up that accounts receivable balance and how much each of them owes and how long they've owed you that money for. That's just one example, but they'll do that for any level. That's true for both audits and reviews. At an audit, they're going to dig into individual transactions within those schedules and really understand and use some statistical analysis to obtain that assurance level that I talked about. Like I said, these audits and reviews and third-party insurance in general can tend to be extensive, long, intimidating processes. So just make sure on the front end you really communicate with your stakeholders, understand what they're looking for, and then find your accounting partner who can help talk you through that process. So that's your financial statements from an external perspective. Steve will really now get into, like we said, the tax side of things, and then also talk through the internal side.
Thanks, Will. And thanks, TechSoup team, for having us here. We really appreciate the opportunity and excited to meet everybody that's joining us. Thanks for coming from all over the country. Really excited to talk about accounting with you guys. From a tax perspective for not-for-profits, we think, okay, well, we're not-for-profit. We don't really owe any taxes. We don't have any tax liabilities. Why are we talking about taxes? But I'm sure everybody on this call is somewhat aware. Each not-for-profit has to file a federal form called a 990 or some version of a 990 with the federal government. This can tend to be a complicated form and include a bunch of financial and non-financial information, some of which is made public or available to the public. So you want to make sure it's right. I think key note on the 990 is I would not tend to recommend preparing that yourself. I would usually recommend to go get a CPA or an accountant that is qualified to prepare that, just to make sure it's right, especially with it being available for public. Some states do have not-for-profit reporting requirements. You see the great state of Nebraska, as Scott alluded to. We're here in Nebraska, featured there, but each state is probably going to have a little different requirement. Some may not have a requirement. I think that's another area where I would tend to guide you towards a qualified advisor, a CPA or somebody like that who could help you to navigate state law as it relates to nonprofit filings. One other thing that I want to point out here is the unrelated business income tax. I think this is important to know as somebody who's leading or not-for-profits or doing the accounting for a not-for-profit. If you have business activity such as renting a building that's producing income, it's possible that you have taxable income even though you are a not-for-profit. So there's a distinction there between working towards your program goals, working towards your mission as a not-for-profit, and engaging in an activity that looks and feels a little bit more like a for-profit business. some schedules or some areas of the 990 that we wanted to cover. There's a section that looks and feels like a profit and loss statement or a statement of activity, like Will described earlier. There's a section that goes through a program service description, and that's one where you'd want to work with your tax preparer closely to make sure that program description fits with your mission and with your values. The revenue and expenses is the part that looks and feels like a, income statement or a statement of activity. There's a public support test, and I think this is one that I wanted to touch on a little bit, along with the contributor information, because those are both kind of in the same vein. The public support test and the contributor information are really important to keep track of and really important to make sure they're accurate. If too much of our donations, too much of our revenue is coming from one source, it's possible that we could get out of compliance with our not-for-profit, our 501c3 requirements. So once again, I'm going to steer you back towards the experts and say, hey, CPAs, other tax filers are probably the folks we want to consult with on this, just to make sure we're following those laws, we're staying compliant, and we're maintaining our status as not-for-profits. So from an internal, so we've talked about external facing financial statements. We've talked about the tax or the IRS requirements. Now we're going to talk a little bit about internal accounting, which is a little bit more in my wheelhouse than the first two areas, but we're going to talk specifically about what roles you might expect to see on an accounting team for a not-for-profit. Now, each not-for-profit may have a different mix of these roles. A lot of times, all of these roles are, done by one person, possibly the executive director, possibly an accountant who's kind of covering all different aspects. And in a larger not-for-profit or a more complex not-for-profit, maybe we have each of these roles. I think it's important to cover these with you guys, the participants on this call, just so that you know the terms and you can understand what roles and who you're hiring if you're looking to fill an accounting position. The first role we see is a bookkeeper. That's somebody who takes care of handling transactional level accounting. That's coding transactions, making sure that they're accurate, making sure that they're in our accounting system. In this case, we're using QuickBooks Online. They're just making sure that all of the data is clean and coded timely. The controller is somebody who's a little bit higher level. They're responsible for making sure that all of the accounting rules that Will talked about earlier are being followed, and producing those financial statements that Will talked about, and making sure that the reconciliation of accounts and the closing of the books is handled. Like I said, a controller is generally a higher level person than a bookkeeper. They tend to focus more on producing reports rather than that transactional accounting. The last position we're going to list here is a finance director or a CFO. That is somebody who's going to work with the organization to think about strategy, plans, and do future looking analysis, not just that retroactive compilation of financials. So the finance director or CFO is really somebody who should be managing the accounting team and really thinking about the forward looking aspect of the finances for the not-for-profit. Another position that's not traditionally an accounting position that we've listed here is the database coordinator. Throughout the next few slides, I'm going to talk a lot about reporting and data. As we've gotten into this age of cloud-based software, the importance of data has really reached a new, milestone. And so having somebody who coordinates your donor management software and other softwares and make sure that data is up to date and clean is really important in order to produce useful reporting for the organizations. So while database coordinator may not be a role you're going to see inside of an accounting, listing, it's somebody we feel like works so closely with the accounting team that we felt we needed to list it and talk about it in this slideshow. So as I talk about that reporting and what we're doing to, provide information to the organization, one thing that we're going to talk about here is key performance indicators. Key performance indicators are financial and non-financial in nature. They're measurements that are going to help provide the organization feedback or, guidance on how we're doing. So a couple examples might be donor retention. Are we're getting people to stick around as donors and donate year after year? How many times are we getting somebody to donate? What's that recurrence? Program outcomes might be one. Are we seeing improved reading scores if that's our goal? Fundraising, there's a lot that we've talked about here that's related to fundraising, but there's other metrics that we might use. If you guys want to throw some metrics or some key performance indicators you guys are using into the webinar chat, that would be great. And we can kind of talk about some of those and potentially talk about them after or in the Q&A section of the presentation here. But all of these KPIs really should be focused on two things: measuring the performance and implementing change or management that's going to allow us to improve our performance. So we want to make sure that the metrics are really helping us further the goals and the mission of the organization. So a couple things from a not-for-profit accounting standpoint that are different than for-profits and kind of add a layer of complexity to accounting for not-for-profits. One of them is fund accounting. Fund accounting, I'm sure a lot of folks on this call are familiar, but somebody might give you some money and say, hey, I want it to be used for a specific purpose. At that point in time, we have a restricted fund that needs to be tracked separately from our operating funds. This creates almost like a separate set of books or a separate bank account that needs to be tracked. So this takes a lot of effort in order to make sure that this is correct. And I would say that from our experience in organizations that have a lot of accounting turnover, this tends to get dropped and this tends to become kind of a mess at the end of the day. So really important to keep track of. I think it's crucial to kind of ask, make sure we're taking the gifts that should be restricted gifts and not just allowing, every single gift that we have to have some sort of restriction on it, because that does create a requirement to make sure that we're reporting, how those funds are used. So that's something to think about as you're kind of fundraising, as you're hearing requests from your donors. And I think that's just one that we wanted to touch on because it is such a not-for-profit specific complexity to accounting. All right, we're going to touch on donor management again here. We talked about that database coordinator and the importance of having clean data. Donor management's key. Whether or not you guys are using a system, a spreadsheet, a Word document, whichever, I think it's really important to keep up-to-date donor records. And the reason is listed here on this slide: stewardship, building those relationships with your donors, making sure that you can keep them informed, making sure that you can engage with them. I think that's key, keeping that engagement going. Obviously, fundraising, that's where the money's at, and that's what we want to use this donor management and use our donor base for. But without that stewardship, without that engagement, it's not going to happen. And so, but tracking how somebody's giving to us and how our engagement with our donors is converting into dollars for the organization is really important. One example of a KPI or a measurement that we like to use with some of our not-for-profits is we like to say, who's somebody that's given you $10,000 over the last 3 years, but has not given you anything in the last 365 days? That's an important measurement to look at for our not-for-profits, where we can say, okay, that's somebody we want to make sure we're touching base with, make sure we're engaging with, because there's somebody who could help further the organization, who's interested in the organization, but maybe hasn't had that engagement over the last year that they need. So this is kind of an example where it's a financial KPI, but it's really kind of a non-financial KPI. And at the end of the day, it's actionable. We're going to go talk to that person after we realize that they haven't been contacted or they haven't given to us in 365 days. Last thing for this, grant management, having some sort of donor management software to track how we're applying for grants, what grants have been, submitted, all of those things we need to keep track of. It just makes us look more professional and organized. The last thing you want to do is, ask a foundation for some money and not look very organized, or send them a grant request twice on accident or something like that. So really having good data and keeping track of everything is super important from a reporting and an operations standpoint here. So some other considerations we have here, and we've kind of touched on a little bit of this, but maintaining up-to-date financial records is key. We talk about how we're going to measure things, how we're going to use KPIs to take action. If we're looking at data that's 6 months old, 9 months old, a year old, I don't know that we're going to get the same effectiveness out of looking at that as we would if we're looking at something that's, say, a week or 2 weeks old. So it's really important to be keeping on top of those financial records, making sure that that bookkeeping is done, making sure that those reconciliations are happening so nothing's slipping through the cracks. The second thing we want to touch on is creating and following a budget. Budgets really help us hold ourselves accountable. They also help with fundraising. If we can go to somebody and say, hey, as you can see, we are budgeting to, grow or to meet our mission, and we need your help. Having a formal budget put together can really help with those kind of asks. But to go back to the accountability, having something that we can measure ourselves against, having an idea of where we're missing or exceeding budget can really give us some insight on how we can go manage our operations and how we can, target certain expenses or certain revenue categories that are performing the way we want them to. I already touched on reconciling bank statements monthly. That's really part of that up-to-date financial records. Very important to do that to make sure that nothing's slipping through the cracks. We don't want to find ourselves on the front page of a newspaper because assets got misappropriated. Really important to be on top of those bank reconciliations and making sure that our financials are tied out on a timely basis. And then the last thing, we see this a lot with some of our clients, making sure that our budget, our finances, everything is in strategic alignment with the organization. If we have a large growth goal and we're spending every dollar that we're bringing in, I don't know that that's a good strategic alignment. If we're saving every dollar we bring in, but we don't have any mission to grow, or we don't have a project that's needed for those dollars, I don't know that that's good strategic alignment either. And so it's really important to have these conversations with the accounting team, with the finance team, to make sure that the way we're using our funds, the way that we're using our budgets really aligns with what our mission is and what our long-term strategic vision for our organizations are. So I lead our outsourced accounting group, as Scott said. We're going to talk a little bit about outsourced accounting here. And the reason we're going to talk about outsourced accounting is not only because we do it, but because we see a lot of times not-for-profits unable to hire those roles that we covered earlier. Accountants are in high demand right now, and it's a pretty tough position to hire for. A lot of times, not-for-profit organizations can't afford to pay as much as a for-profit, and so they're left struggling to fill these positions, or filling them with folks who might stick around for 18 months or 2 years and then turn over that position. And as we talked about with the fund accounting, every time we turn over that position, we kind of take a step back in our accounting and our reporting journey, and we aren't able to get ahead. We aren't able to get to those measurements that allow us to manage our organization successfully. So we're going to talk about some benefits or some reasons why you would do outsourced accounting or use an outsourced accounting consultant. First, cost efficiency. When you hire somebody, generally speaking, they require benefits, they require some payroll taxes paid with their salary. There's a loaded cost to every single employee. And we tend to find outsourced accounting coming in below that number, which is obviously a benefit for a not-for-profit who's operating on a tight budget. Access to expertise. We talked about each one of those positions, that bookkeeper, that controller, that finance director. A lot of times we don't need a bookkeeper and a controller and a finance director. We need a slice of a bookkeeper's time. We need a slice of a controller's time, and we need a slice of a finance director's time. We don't need, 3 different people. We need 3 people in one. That's really tough to hire for. And even if you find somebody who's willing to do that, it's probable they don't have one of the skills, or maybe if they're that finance director, they don't really have the attention to detail or the desire to do that bookkeeping. So access to expertise means you can get a slice of each person's time, and these folks are generally speaking focused on a not-for-profit industry, so they have a little bit higher level of knowledge about not-for-profit accounting and finance. Also, depending on what outsourced accounting group you use, it's possible they have access to resources that are beyond the accounting scope. Scott's with our technology group here. If I had a question on technology from one of my outsourced accounting clients, I could go to Scott and say, hey, I'm getting this question. Can you help me think through it? So sometimes you're able to tap into resources that aren't just accounting related, depending on your relationship that you develop with your provider. Scalability and flexibility. I kind of talked about getting 3 slices of time. If you need to grow, or you need to shrink your team, or you're really busy during one time of the year and you're not busy during another time of the year, being able to scale up or down that position or the requirements of that position is really helpful too for not-for-profits to keep the cost under control, and to just make sure you're getting the service you need at the time you need it. A lot of people I saw in the chat were saying they were kind of the executive director or the leader of the not-for-profit and were handling the accounting. I think this is typical. We see it a lot, but it takes away the focus from those core activities. Whether that executive director position really should be going out and doing fundraising, should really go be a part of the program that's being provided, handling bookkeeping, handling those controller level duties takes away from somebody's ability to focus on those core activities. And we do see a lot of times folks get tasked with kind of helping with the accounting task or helping with the finance task, even if it's not something that they're really hired for in the first place. Maybe they're good with numbers, maybe they have some bookkeeping experience in their past, but they were hired for a different purpose, or they could be used towards a more core activity of the not-for-profit. And so having those folks focus on, the secret sauce in the not-for-profit, the thing that we do well, that's really important and a benefit of having the accounting outsourced. Risk management, this is key. I think most not-for-profits have some risk with their accounting function just because of numbers. And we see that a lot on those disclosures that Will is talking about. There's, lack of segregation of duties, not enough people involved in the process to split things up in a way that's ensures, limited risk. Well, by hiring a third party, you can limit some of that risk. You can spread those duties around, and you can make sure that, we're putting some controls in place to make sure that somebody who's submitting bills to the organization is not the same person who's paying those bills, because that obviously creates a problem. And then improve service quality. I think this gets back to what I talked about earlier, where every time we lose somebody in that accounting role, we get a little further behind on our ability to report ahead. So having somebody that's available to contact, available to kind of push the ball forward as far as reporting goes, really makes a big difference. If we can be talking about which donor hasn't given to us in the last year, that's a better conversation than have we tied out cash 6 months ago? And a lot of times we find organizations asking that kind of question, the have we tied out cash 6 months ago question, not the who's the donor I should go talk to because they haven't given to us in the last year. And the more you can stabilize the accounting and reporting function in the organization, the more you're going to be able to ask those impactful questions that are going to allow us to further the mission of the organization. So we got asked to join with TechSoup for this webinar and to provide a potential service for a limited number of organizations. I want to talk a little bit about what we would be able to offer some TechSoup members here. We're looking for organizations with annual expenses in excess of $1 million. using QuickBooks Online, having limited government funding. We just don't want somebody who's got tons of government compliance and grants. We're not built for that. And the real key for somebody that we're looking for, and I think this goes for a lot of folks in our industry, we want an engaged executive director. We want a team that wants to engage with us, wants to use this reporting that we're creating, wants to use the information that we're capable of giving to you guys to further the organization. And we see some of our best engagements and some of our best clients are the ones that are really dialed into what we're doing and really dialed into, okay, how do I use this number to help? What action do I take if I see this? Those are the kind of folks that we want to work with, and we think we can really help forward their mission. The way we operate, and this varies by provider. We use QuickBooks Online, which I think everybody on this call should explore their QuickBooks Online subscription through TechStack, or through, sorry, I'm reading TechStack, through TechSoup. TechSoup has an incredible pricing model with QuickBooks Online, and I think it would be worthwhile for all not-for-profits to really explore that option. We use QuickBooks Online as our accounting software. We ask the client to manage their revenue software. We ask the client to have payroll done either by themselves or through a third-party provider. Lutz in particular is not structured to handle payroll very well. And I think there's a lot of really great options as far as payroll goes, whether it's ADP or somebody like that that could handle payroll for not-for-profits in a cost-effective manner. We handle all bank transactions. We can handle bill pay and expense management. With that would be credit card management and expense report management. And then as part of our offering, we can have recurring meetings where we're meeting with our clients monthly, discussing finances, discussing what's going on in the business. And we have the option to have some of this real-time reporting that we're talking about, where we're pulling in data from QuickBooks, data from other sources, and providing real-time information to the organization that we can use to guide the strategy and help manage the initiatives that the organization's taking. So that's really the way we use technology in our offering. What's included? We have an onboarding phase where we kind of get everything cleaned up. We set up automation inside of QuickBooks Online. We clean up the chart of accounts. We set processes and procedures. And then we get into our monthly service where we're reviewing transactions, we're coding everything, we're making sure that everything's reconciled, we're closing the books, and we're producing financial statements. They don't have the assurance that Will was talking about earlier. They're disclaimed from that kind of assurance because at that point we would not be independent, since we would have coded transactions and really handled the bookkeeping side of things. Also included in this offering is preparation of the 990 and 1099s. We have services that can be added on. I alluded to some of them. That's bill pay, expense management, real-time dashboards, custom reporting, and those meetings. What's not included, and I already said this, that assurance that Will talked about earlier, that audit, that review, we can't do because we're not independent in this situation. This is just an example of a page from one of our reports. I think it's going to be available to you guys, but we produce a report that goes out that we intend to be used by a board or a finance committee that shows graphical representations of the financial data and gives a write-up of the financial data that isn't just financial statements. I've been in a lot of finance committee meetings or board meetings where we're going through the profit and loss statement and looking line by line, and inevitably we spend time going down a rabbit hole over a $500 variance from last year. It's not a good use of that committee's time, and we try to build our reports to call out those items that are a good use of finance committee's time. I think regardless of whether you do your accounting yourself or you have somebody from an outsourced capacity, tailoring your reporting to your audience to make sure that the conversations you're intending to have stay on track is really crucial. I think that's it for our prepared presentation. We have some time here for questions if people want to submit those through the Q&A. I know we've had a couple come through here. One of them was about price for our engagement. Our opening price or our minimum price would be $1,800 for that service per month. Let's see, what else do we have here?
Steve, there's another question. One of them was, how much is the average salary of a finance or ops director to manage financial data capturing and reporting? How does that compare to outsourcing?
I don't know everybody's pricing in terms of outsourcing. I think you can get some cheaper options, but you might get what you pay for. From a accounting perspective, I can tell you that you can hire a part-time bookkeeper from anywhere from $30,000 a year to $60,000 a year. You might find yourself on the higher end of that if you're getting a full-time bookkeeper. If you're hiring that controller level person that's kind of handling producing financial statements, we see that position anywhere from $85,000 to $100,000 a year. And the finance director position can be anywhere north of $125,000, depending on the size of the organization and the qualifications of the person you're hiring. So I think as we're looking at it, if you're going to hire a controller, a lot of times folks are like, well, I want to spend $70,000, and that doesn't really fit in our environment, at least in Nebraska. And we see people kind of find somebody that fits that bill. Maybe they aren't up to the expectations of what was asked for from the role, and eventually it just doesn't work. And so we recommend, if you are going to hire, budget to hire at the market price so that you get the right person for the job.
Here's another one from Kevin Stutzman. It said, and it sounds like this is maybe a technical question, but I've heard accountants say that a portion of the executive director's salary should be under program expenses. Is there a rule of thumb or percentage that is recommended?
I would work with the preparer of the 990 on that. They'll probably ask you some questions about how your time is allocated as an executive director. I think it's totally fair to allocate some portion of the executive director's salary to program expenses, especially in smaller organizations. I mean, even in larger organizations, I think that's fair. I think that would go to the preparers of the 990, though. They probably would have an opinion, and whoever's signing that return is probably going to be the one that wants to make that call.
Steve,
go ahead, Will.
Sorry, I got another one that I typed a response to, but wanted to have you weigh in on also. Somebody asked, can you explain performance? And this would have been back when you were discussing KPIs and performance reporting. So I pointed out your example of the donor retention KPI and measurement. But if you want to give a couple other examples.
Yeah, I think we were talking a lot about donations and donors and that side of the house when we were talking about performance, because that's easily measurable and it's kind of part of the donor management platform. But it's really important to get kind of program outcomes as measurements too. And so I use that reading score number. If your goal is to teach kids to read, and we can have some sort of measurement of where their reading comprehension is when they started, and maybe we do that same test every year and kind of getting those numbers too. I think that's a good way to measure program effectiveness. And data is not necessarily always financial, and sometimes we got to get those program specific data points so that we can have something to measure and have something to report on. But a lot of times what we're focused on initially is, okay, what's our profitability by service or program? How much are we spending per program? What's our head count in each program, and what's our how many people are we serving? We're asking a lot of financial questions. We're using a lot of financial measurements to start out with, but as we evolve, we're kind of getting into more of those data points that are non-financial in nature.
Steve, another one here. Do we have, it was kind of about payroll services. Can you offer payroll examples of payroll services that are affordable and work well for nonprofits? Do we have anybody that we've sort of seen more often than not?
It's hard to say nationwide because there's people all over the country on this call. ADP is a very large company that we see a lot of not-for-profits use, and that integrates with QuickBooks Online. So I think that could be an option for folks. I know there's Gusto is another online payroll provider that integrates well with QuickBooks Online. QuickBooks themselves does payroll as well. So I think there's plenty of options out there. Those are just three examples of kind of national. Those are three examples with national reach.
Another one, can any tax preparer help with the 990, or are there specialized people for this?
I would tell you to just talk to whoever you're interviewing for the tax preparer. If you're going to go meet with the CPA, I would make sure that they have experience with 990s. You can just simply ask, do you handle not-for-profits? Do you have a non-for-profit practice? I think those are fair questions to ask, and I would tend to go with somebody who has some 990 experience.
I think there's another one. Just Don had asked kind of about the breakdown of the $1,800 outsourced to bookkeeper, controller, and finance director roles. Kind of what's that? What's the breakdown of those roles?
From our perspective, we don't really break it down that way necessarily. I would say it depends on which organization we're working with and how much time we need to spend on each role. But I don't really like to think about it that way. I like to think about it as we're kind of the accounting department for the not-for-profit at $1,800 a month. So each role you're going to get to pull as much of that resource as you want or as you need for the particular time period we're talking about. Sorry, I know that's kind of a non-answer, but I don't really think about it in terms of like this much is allocated to the bookkeeper. It's more just we want to fill the role of an accounting department for you.
Well, a lot of times if we're preparing for board meetings or doing those things, sometimes the CFO controller roles will flex up at those times versus the normal time where it's, bookkeeping and controlling.
I see one in the chat here that's kind of asking about setting up chart of accounts properly and entering a budget at the beginning of the year. I think you could work with accountants or, CPAs to kind of help streamline your operations, help set up your accounting. The offering we're describing here is really not kind of a project offering like you're asking for, but I know that there's a lot of CPAs and other accountants out there that are willing to engage in that kind of project work to help set things up correctly for not-for-profits. Let's see what else we got. You guys see any other ones?
Yeah, do you want to just maybe talk? There's a couple questions about, the 990 versus the 990N, the $50,000 limit. So, one was, new nonprofit cash in hand is low. Great success with in-kind donation. Safe to assume that combined cash and in-kind is value over 50K. Then we need to bid a 990 over the, instead of the 990 postcard, sort of that $50,000 threshold.
Yeah, Erica, I would just touch base with an accountant and explain your situation and make sure that, you've ran that by somebody and given them actual numbers in terms of those in-kind and cash donations to make sure that you're getting the right answer. I know there's a simplified version of the 990. There's a 990 postcard, and then there's the full-blown 990. So I don't want to give you advice on this call without knowing a little bit more about your situation. But I know that on the smaller end, there's some options that are a lot less intense than the full 990. CRM. Somebody's asking about CRM softwares. We've worked with a lot of CRMs from a not-for-profit perspective. On the high end, we see Razor's Edge. I think that's pretty expensive and kind of a tool for bigger not-for-profits. It works really well for bigger not-for-profits, but we see, I think there's like Little Green Light, Bloomerang. There's a bunch of other, if you just Google something, there's a lot of these CRMs that are built for donor management. And maybe if you type donor management software, you'll get something that's geared a little bit more towards the not-for-profit space rather than kind of a CRM for a for-profit business. Yeah, somebody had a good call out on the smaller not-for-profits without funds to hire somebody to help with projects for QBO. QBO does have a huge library of resources and trainings, et cetera, to kind of get you comfortable with QBO and up to speed on how to use it effectively. All right. Would some of the executive director's time also go to development if they are not involved in if they are involved in fundraising? I think yes is the answer to that. It could go, your executive director time, or anybody's time for that matter, could be split into all three of those groups. Once again, I think depending on how you're using your time or tracking your time, your ability to split that might be a little limited, or, you might only be able to estimate it. I think you'd want to talk with your 990 preparer about that. So should probably know this, but is there paperwork to fill out for donors so they can claim it on their taxes? Yes, there is. There's a letter that needs to go to donors at the end of the year, thanking them, kind of summarizing their donations to the organization. And there's some language on those letters that needs to be included that, identifies it as a deductible contribution. And if you're having somebody donate at an event or something along those lines where they're giving you $100 for a seat at a table and a meal, you need to take the value of the meal out of their donation. So if it's $100, the meal's worth 50, their deductible piece of that contribution is $50 because the fair market value of the meal that you provided was 50. I hope that doesn't make more confusion, but that's something that we see a lot of times.
Steve, good question. Oh, go ahead, Will.
Oh, I was just going to add, I responded to that question with a text and added a link to the IRS website that they have just a very brief summary on that written acknowledgement that Steve mentioned.
Thanks, Will. Steve, on the 1099s, anything that you've seen that are sort of pitfalls or things to pay attention to? And I don't, Shane had asked about 1099s, and I didn't know if he meant 990. But
I think he might mean 1099s.
Okay.
Just make sure that when you're engaging with a vendor that you get a W-9 as soon as possible, so that you're able to send them a 1099. I think we see a couple things. If you're using QuickBooks, there's a report that allows you to sort expenses by vendor, and that'll allow you to kind of develop your 1099 list very easily. Anybody over $600 needs a 1099 unless they're a corporation. And that goes back to, okay, when you set up a vendor, get a W-9, they'll let you know if they're a corporation so that you don't have to send them a 1099. If they do need a 1099, if they're not a corporation, QuickBooks will help you keep track of all of that well. Okay, we raised substantial funds by raffle. We ask winners to provide W-9s. I would, if you're giving somebody cash through a raffle, I would definitely get a W-9 and send them a 1099. That's something that, there's no reason not to report. I know that the donor is probably not going to be thrilled about it because it's going to show up as taxable income for them. But I think from your perspective and in doing things right, checking the right boxes, I would be issuing a 1099 to that person for sure. Any recommendations or pitfalls in providing nominal stipends to volunteers? I'm not sure what kind of stipends we're providing or how we're providing them, but I think that could get pretty complex in terms of how we give somebody a stipend. We see a lot of great credit card management systems out there for employees. And so potentially, you know, if you wanted to cover some form of expense for an offer or for a volunteer, maybe you could have an employee pay for it. I don't know that I'd recommend giving volunteers a stipend. If you do, I think you'd want to consult with a payroll or a tax specialist to make sure you're not putting yourself in a position where you need to give a 1099 or something along those lines. Yeah, and somebody mentioned it. Stipends are a problem because the person's independent contractor. Classified as a contractor instead of an employee. This is a tough one. You know, if it feels like a job, if somebody's coming regularly, they're getting paid regularly, they're probably an employee. Again, very specific situations, and I don't feel comfortable giving, you know, advice in general on that topic. It's more a specific question based on a case by case basis. One more here. We run a small retail operation which supports our mission. Should we put some executive director time towards a cost of goods sold? I think that's an internal reporting question, and I think it's a good one, and maybe a good one to kind of finish on here. But, you know, external reporting in 990 splits our expenses into program, fundraising, and development. That's how the 990 is structured, and that's how we want to report it externally on that front. From an internal perspective, especially with your retail operation, it's important to know that you're selling products or services at a margin that helps, you know, support the business. And so allocating time towards cost of goods sold is more of an internal reporting function as part of your accounting group. But I think it's totally fair to allocate time that you consider variable in relation to your retail operation into cost of goods sold. For example, if we need our executive director in the retail operation 2 hours a day, then yes, that, you know, portion of their time should be allocated to cost of goods sold because it is part of that service. It's a cost directly related to that retail operation. Now, whether or not you'd be able to, in terms of unrelated business income tax and those rules, I think that's where you'd want to talk to your 990 preparer and make sure you're, you know, allocating expenses correctly. In terms of internal reporting, I think that's a good idea. Okay.
Steve, I think we're good. I think we're at time.
Well, appreciate the time. Thanks, TechSoup, for having us, and thank you guys all for joining us. Really enjoyed helping out and answering some questions here. Thank you.